Welcome back to Investing Talk Podcast.
Today we're looking at BitDigital.
As usual, before we start, subscribe, like, and comment to this video to support the show.
You know, when you think about Bitcoin miners, a pretty specific image pops into your head, right?
Totally. You're picturing these massive hot warehouses, just rows and rows of loud machines.
Exactly. Deafening fans, burning tons of electricity. It's an industrial operation.
Right. It's dirty, it's loud, it's super capital intensive. You're moving atoms to make bits.
Well, honestly, if that's the picture you have of BitDigital, you're looking at a ghost.
A ghost. That sounds a little ominous.
I mean, in the sense that the company people thought they knew, that pure play Bitcoin miner, it's rapidly fading away.
Okay.
The company that's there today is fundamentally different. They've basically transformed into a massive Ethereum treasury and a high-tech infrastructure play.
So it's less about the mining rigs now.
Way less. It's more about yield, staking, and some hidden assets that I think completely change the valuation.
Okay, so let's unpack that, because that's the big question, right? So what?
Right.
Are we buying a tech stock here, or are we just buying a proxy for the price of Ethereum? Because if I just want ETH, I can go buy ETH.
Exactly. You can, but it's the more that we need to focus on.
The more.
Yeah. They are actively winding down the Bitcoin mining, the very thing they were known for. They're going all in on Ethereum staking.
Wow. That is a pivot. They're moving from this hardware-heavy model where your machines are depreciating every single day.
And you're at the mercy of electricity costs.
To a capital-efficient, yield-generating model. It's like going from being a gold miner, digging in the dirt,
Hoping you strike a vein.
to being a bank that holds the gold and just lends it out for interest.
That is the perfect analogy. And when you look at the Q3 numbers, you really start to see it.
All right, let's dive into those fundamentals, the hard numbers.
Okay.
They reported total revenue of $30.5 million for Q3. That's up from Q2. But, let's be honest. In the world of tech stocks, $30 million isn't exactly earth-shattering.
No, but you have to look at the composition of that revenue. The thing that really jumps out isn't the total number. It's the staking revenue.
Okay.
It hit $2.9 million for the quarter. Now, that might sound small, but it is up 542% year over year.
542%.
Yeah.
Okay. That's not just growth. That's exponential. It shows the new strategy is actually working.
Precisely. They still had, $7.4 million in mining revenue, but the trajectory is just undeniable. Mining is the legacy business.
And staking is the growth engine.
Right. They're turning the ship, saying goodbye to the energy wars and hello to becoming a validator giant.
But to be a giant, you need the asset, right? You can't stake air. How much Ethereum are we actually talking about here?
The scale is actually kind of shocking. As of December 31st, 2025, their treasury held 155,227.3 ETH.
155,000 ETH. Wow. I'm just doing the math on that.
Yeah.
That is a fortress of crypto.
It is one of the largest publicly held Ethereum treasuries in the world. But here's the thing. They aren't just sitting on it like a dragon on a pile of gold.
They're putting it to work.
They're putting it to work.
Right. This is the yield part. I saw in the report that something like 89% of that is actively staked.
And it's generating a 3.5% annualized yield on it. Just in December, they generated 389.6 ETH in rewards.
So that's purely passive income. It's like a dividend, but it's paid in the asset itself.
Yeah. So if Ethereum goes up, your dividend also goes up. It's compound growth on steroids.
But the skeptic in me has to ask, why can't I do that myself? Why do I need BitDigital? I can go stake on Coinbase or Lido.
You can, but there are risks. There are fees, custodial risks with exchanges. BitDigital has built institutional-grade validator infrastructure. We're talking near 100% uptime.
And they have this slashing protection.
Crucially. Right.
For anyone listening who's not deep in the weeds, explain slashing. It sounds terrifying.
It is the horror movie of the blockchain. If your validator messes up, goes offline, or does something malicious, the network penalizes you by slashing your ETH.
A major risk for a solo staker.
A huge risk. And BitDigital has the tech stack to mitigate that. They can capture that yield way more efficiently than you or I could at home.
Okay, so professional-grade yield farming. That makes sense. But what's the balance sheet look like? I always worry about debt when I see crypto companies growing this fast.
That's the voice of reason we need. And I look for the leverage traps. Analysts are actually calling the balance sheet flawless, with moderate risk.
Really? Flawless.
But there's always a but.
Knew it.
They do fund some of this growth through convertible notes to buy the ETH.
Convertible notes, so a loan that can turn into stock later on.
Exactly. It's debt that converts to equity.
Yeah.
It's great for cash flow now, but it carries the risk of dilution for shareholders later. It's pretty standard for high-growth tech, though.
Fair enough. So they have the ETH, they have the yield, but let's talk about this hidden asset you mentioned. This isn't just an ETH play.
This is the competitive mode. This is what makes them different from just an ETF. Bit Digital holds a 27 million share stake in a company called WhiteFiber.
WhiteFiber. Sounds like a breakfast cereal.
It does, doesn't it? But no, this stake is valued at over $427 million.
Wait, 427 million. That is a massive chunk of their value. How did a crypto miner end up with a huge stake in an AI infrastructure company?
It wasn't luck, it was networking. It comes down to their CEO, Sam Tabar. He has a dual role that bridges these two worlds.
So you've got the steady, yield-bearing Ethereum side.
And then you have this high-growth, speculative AI infrastructure side through WhiteFiber.
That's a powerful combination. It's like you've got digital oil and the AI boom under one roof. So what are the projections? Where does this go?
The forecasts are incredibly bullish. They're projecting $376.7 million in revenue and about $35.3 million in earnings by 2028.
By 2028, that's a serious ramp up from a $30 million quarter. And the analyst fair value estimate I saw was around $5.38 a share.
Which, from current levels, implies a potential 145% upside.
145%. That's a number that gets your attention. But that's only if the market agrees. And speaking of the market, let's pivot to the charts.
Yeah, let's look at the technical.
Because the price action has been, well, lively. Multiple surges, 3.5%, 3.6%, another 3.2%. And they're not random. They seem to follow announcements about their ETH holdings.
It's completely catalyst-driven. The market is reacting directly to the treasury growth. Every time they announce we have more ETH, the stock pops.
So investors are basically repricing the company in real time with every update.
It seems like it. And it's not just retail traders either. I'm seeing some serious money moving in.
You're talking about the institutional flow.
Right. We saw SG Americas purchase 678,000 shares. That's a position worth about $2.04 million.
Not pocket change.
No. And institutions like that don't usually gamble on a whim. That purchase suggests smart money is accumulating. They're building positions.
And the analysts seem to agree. They're testing those resistance levels upward. We're seeing consensus targets of $6 for a moderate buy.
And Noble Capital has an outperform target of $5.50. So the technicals, the analysts, and the fundamentals are all pointing in a pretty similar direction.
It feels like the chart is trying to catch up to the story. But charts are one thing. Let's move on to market mood.
The sentiment.
Break down what AlphaVantage is telling us. Is the internet loving this company or hating it?
Oh, it's incredibly positive. The weighted sentiment is strongly bullish. We're talking an average score of about 0.57.
And 0.57 is high.
Very high. 0 is neutral. Anything over 0.2 is pretty good. This is glowing. In fact, 5 out of the last 5 major headlines scored as bullish or somewhat bullish.
No negative news in the batch. That's rare. So why is everyone so happy? Is it just the ETH price?
That's part of it, but there's a deeper narrative shift. The big one was their inclusion in the S&P Software and Services Select Industry Index back in December.
Ah, the index inclusion. That's a huge deal.
It's a reclassification.
Yeah.
Before, they were just a crypto miner. Now they're officially infrastructure and software.
That changes everything. It changes which funds can even buy them. Passive funds tracking software indices now have to buy them.
And that gets you a much better valuation multiple. And it's not just the index. They've been beefing up the board too.
Right, the addition of Amanda Cassette.
Yes. She's a big name in both AI and Ethereum. She was CMO at Consensus. Bringing her on board just reinforces that pivot to high-tech infrastructure.
It validates the whole strategy. And clearly, the institutions are buying it.
Literally. Institutional ownership is at 47.7%.
Almost half the company.
And get this. Voya increased their stake by 988.6% in Q3.
Whoa. Nearly 1,000% increase.
You don't do that unless you have aggressive conviction. That's a table-pounding bet.
That is aggressive. But, and you knew this was coming, it can't all be good news. Time for my job.
I was waiting for it. The other shoe.
Let's do the risk check. Because while Voya is buying with both hands, someone on the inside was selling.
The insider activity.
I saw it. The CFO sold over 1 million shares. Now, I know execs sell for lots of reasons, but 1 million shares. That's a lot to dump when the story is supposedly this bullish.
It's a red flag. We have to admit that. When the person who knows the books better than anyone is cashing out a big chunk, it makes you wonder.
It makes you wonder if they think the price is a little full right now. If the upside is 145%, why sell?
To be fair, though, we have to look at the other side. That cluster buying from new investors like Voya and SG Americas completely absorbed that sale. The market didn't crash.
True, the institution scooped it up, but it still makes you wonder, and there are other risks here.
For sure.
The concentration risk is the elephant in the room. They are betting the farm on Ethereum.
They are. If the price of ETH tanks, BitDigital hurts, period. There's a very wide fair value spread for a reason, somewhere between $4 and almost $12.
Where they land on that spectrum depends almost entirely on the crypto market.
And the market knows it. That's why you see a Zacks rank #3 hold. The volatility is priced in.
And what about the execution risk on the AI side? We talked about WhiteFiber, but isn't that mostly just potential right now?
It is speculative. Until we see concrete revenue coming from that AI integration, it remains a free option rather than a guarantee. We haven't seen the cash flow yet.
So buy it for the ETH and treat the AI part like a lottery ticket.
That's a fair way to put it. Don't pay for the AI buzz until they actually prove it.
Okay. We've looked at the good, the bad, and the speculative. Bring it all home for us. What's the verdict?
Putting it all together, I am assigning a final bullish score of 8/10.
8 out of 10. That's a high conviction score, especially given the CFO sale.
It is, but the structural shift is just too compelling. The thesis is you're buying a high-conviction Ethereum play with a 3.5% dividend-like yield from staking.
Which provides a bit of a floor.
Exactly. And then on top of that, you get this massive free option on AI growth through WhiteFiber. If that valuation gap of 145% is even half right, it's a compelling entry.
Provided you can stomach the volatility.
This is not for the faint of heart. If you can't handle a 10% swing in a day, look somewhere else.
So what's the time horizon here?
I'd say it's a multi-quarter hold. Look toward the Q4 earnings in late February or early March next year, and just keep an eye on those monthly ETH Treasury updates.
As long as that stack of ETH keeps growing, the thesis holds.
That's it.
There you have it. A Bitcoin miner that's reincarnated as an Ethereum powerhouse. And here's a final thought for you to chew on. If they succeed in turning ETH into a yield-bearing asset for shareholders, does that make them a tech company, or does it make them the first central bank of the crypto age?
It's going to be a fascinating year for them.
That's the verdict. Don't forget to subscribe, like, and comment to support the show. See you next time.